Okay, now let's talk about my profitable trading tips and strategies. The first strategy is taking a $100 risk for an explosive profit. This strategy has helped me to turn a $2,000 investment into $48,000 in just a few months. Well, it wasn't an overnight gain, but I did make this money passively, without really putting forth a lot of effort. How this strategy works is simple. I'll simply put $100 into new promising altcoins, which are selling at a few pennies per coin. I'll throw $100 into these new coins and forget them. If one of them collapses, I'll lose a maximum of $100. You see, it's not a big deal, but my gain is potentially unlimited. For example, if a coin is selling at 1 cent per coin, with $100, you can easily buy 10,000 coins. Now just imagine what will happen if this coin value goes up to $1 a coin. Well, you can easily make $10,000 out of your $100 investment. Looking at Ripple, it was selling at 0.6 of a penny. If you'd bought $100 worth of Ripple, or around 16,000 coins in early 2017, you could have made over $6,000 when its value reached 38 cents a coin just 5 months later. If you'd kept holding Ripple until early 2018, you could have made over $50,000 when its value went up to $3 per coin. You see, turning $100 into thousands of dollars is possible in the cryptocurrency world. What would happen if your coin value reaches $100 or even $1,000 like Ethereum? Just do the math. You see, it's a no-brainer deal. You may think this is gambling, and actually it's not at all. That's because I take full control of my risk and my money. I know exactly how much money I'll lose if I fail, and I see the potential of holding these cryptocurrencies, and I'm willing to take that $100 risk. The second strategy that I want to talk about is that you should own multiple standard cryptocurrencies. Standard cryptocurrencies are coins that you can use to buy other altcoins. Examples of standard cryptocurrencies are Bitcoin, Ethereum, Tether, and Bitcoin Cash. More and more altcoins will be used as standard digital currencies in the future when they become more popular. You can use technical analysis to determine market trends so you'll know if a coin value will go up or down in the next couple of days or weeks. Now let's consider this example. Assume that you have both Bitcoin and Ethereum in your wallet, and after doing some analysis, you found that Bitcoin is in a downtrend and Ethereum is in an uptrend. For example, now you want to buy Tron or TRX. Should you use Bitcoin or Ethereum to buy Tron in this case? Since Bitcoin is in a downtrend, this means that its dollar value will likely go down in the near future, and your buying power with Bitcoin will decrease. So in this case, you'll want to use your Bitcoin to buy Tron before its value goes down. In terms of Ethereum, since it's in an uptrend, or in other words, its dollar value is going up in the near future, you'll want to keep holding it and make more profit. For example, in another case, when Bitcoin value goes up and Ethereum goes down, you'll want to use Ethereum to buy Tron because your buying power with Ethereum will decrease. And you'll want to keep holding your Bitcoin to make more profit. If you have no idea about how to determine market trends with technical analysis, don't worry, we'll get into that later in the next module. Okay, the next cryptocurrency trading tip. You cannot buy the dips or buy low and sell high if you have all your money already invested. You'll leave a lot of money on the table if you invest everything you have in altcoins, and if you don't have any funds available so you can instantly buy other coins when they're cheap. For me, I prefer to invest 50% of my money in standard cryptocurrencies like Bitcoin, Ethereum, and Tether, and 50% in altcoins. For example, if there's a new coin that's going to skyrocket in value, I can easily buy it with my Bitcoin or Ethereum. In this case, I won't miss any opportunities to make huge profits on the cryptocurrency market. Okay, the next trading tip for you. For long-term investments, you can buy and hold coins that can be exchanged for Tether or USDT. Owning this coin can help you avoid market crashes and protect your money. What I like about this coin is that every Tether is always backed 1-to-1 by traditional currency held in their reserves. So 1 USDT is always equivalent to $1. If you notice the previous cryptocurrency market downturns, you would find that every coin's value went down by at least 20 to 50%, but Tether's value stayed the same, which is equivalent to $1. So the strategy is that when the whole market is crashing, what I want to do is to convert all of my investments into Tether to protect my money. And when the market starts going back up, I'll buy the dips and make huge profits. And the final tip for you is don't join any cryptocurrency trading groups or communities. The reason for this is simple. You don't want to be affected by other people's emotions and opinions. Most people coming into the cryptocurrency world have no trading background or experience. They buy cryptocurrencies as a way to get rich quickly, but they have no idea about what's going on with the market. So this means those people are gamblers, and they can be easily affected by their emotions and eventually make bad investment decisions. By taking this course, you know everything you need to become a profitable investor. So just believe in yourself and all the strategies you've learned here. And make sure you make investment decisions on your own, based on your own analysis and strategy. In the next lecture, I'll talk about the best trading tool that you can use to perform your technical analysis.